All right, Code 3 community, welcome back. In this video, we're going to talk about gold and Bitcoin a little bit. I heard something the other day on the Rebel Capitalist show with George Gammon. Had the opportunity to be around George Gammon a number of times. And if you're not listening to George, you should really check him out. I mean, the guy is just super, super smart, extremely articulate, well-connected, and just a fascinating guy to listen to. He's always talking about economics and how it relates to free market capitalism, liberty, and freedom, and how all those things tie together. So he's a macroeconomics guy. He's definitely in the weeds on it. And he was talking about something interesting the other day. And you guys might find this rather interesting. He was talking about how he's not adding to his Bitcoin positions because Bitcoin is trading the NASDAQ, basically trading right alongside the NASDAQ as a risk-based asset. So if you think about it, all the Bitcoiners in the world, they're they're talking about um, essentially they're talking about Bitcoin is a hedge against fiat currencies, which we all know dollars and any other printed currency is a fiat currency, and Bitcoin is supposed to be the people's money and real money and sound money, I guess, is what I'm saying, and it's not supposed to be nearly as volatile or deflate or inflating as fiat currency. Well, I thought it was interesting when I heard George say that, so I went and looked, and I just pulled up a chart and we added a comparative analysis. And sure enough, if you look at it, look at that. This is over the last 3 months. Blow that up so you can see it. But it is trading right alongside the NASDAQ. And if you look at the comparisons in those two, that's kind of interesting. I was actually kind of surprised by that. It um so the question is, if it's trading alongside the NASDAQ, and we all know the NASDAQ is heavy in tech stocks, and we did some videos earlier in, well, I guess it wouldn't be earlier in the year, it'd be late last fall. We got back from the New Orleans Investment Conference, and um they talked about how the NASDAQ was overpriced and there was a bunch of speculation in the markets, and there was all these companies that were branding themselves as tech companies, even though that isn't really what they do, just because they could get higher IPOs, and it was just all speculative. Well, that's a speculative risk-based asset then, and so it's all buy low, sell high. So in other words, cash to something back to cash. And when you see Bitcoin trading alongside the NASDAQ, it when George said that, I had to go look, and sure enough, I mean, look at these similarities. This just blew my mind. And so you got to wonder, if you're looking for sound money, if you're just looking for a store of value, not an investment, but a store of purchasing power, is Bitcoin the way to go? And George's position was he's not going to add to his Bitcoin position as long as it's trading with the NASDAQ. And he thinks that it's trading as a risk-based asset, not really a store of wealth. So therefore, it's outside its original purpose. And he'll be the first to say it may be the future. He doesn't know. But he's not going to add to his position when it's in this situation. So I wanted to look at that and bring it to you guys. And then I want to show you another thing. Let's look at gold. Let's look at gold here. Um, Gold is relative to Bitcoin. So we got gold on the bottom here, Bitcoin on the top. Look how much more volatile Bitcoin is. So that's over the last 2 years. The gold's pretty slow and steady, boring, which gold is, again, a store of value. And sometimes I'll hear people say, well, I think gold's going to go up. It's certainly up today. And they'll talk about be a good investment. I'm going to get in while I can. And then they just want to go from cash, US dollars, excuse me, to gold back to cash. Well, that's not the purpose of gold. If you go from cash to gold to cash, all you did was save your purchasing power. Now, that would make some sense if you went from gold to cash, or I'm sorry, from cash to gold back to cash, and then, excuse me, and then you were going to use that cash to transact into, I don't know, an oil investment or apartments or ATMs or whatever you're going to do with it, buy a pickup. I don't know what you're going to do. You're just storing your purchasing power. So this is 2 years. Let's look here. Let me bring this in a little further at the last 3 months. If Bitcoin was serving its purpose as simply a store of purchasing power, in other words, sound money, and not a risk-based asset, as George said it was trading as, would we see this? If you see back here, they're pretty close together. Look at the delta, the space between them. And as time comes along and inflation reports continue to come out, Bitcoin falls and gold starts to ramp up. And look at the spread between them here. Well, if they're both a store of value and simply a hedge against inflation or a devaluation of the currency, shouldn't these be more similar? Shouldn't they stay closer together in how they're tracking? So if you look at that, that's kind of interesting. And then we see this cross. I wanted to drill in a little bit further here. Um, I just found that to be extremely interesting that we're seeing this spread open up where gold is starting to trade up denominated in dollars and Bitcoin is trading down denominated in dollars. So that kind of leads to George's analysis. It kind of supports his analysis. Well, it does, not kind of, that Bitcoin is trading as a risk-based asset. It's all buy low, sell high. That's not the point of gold and Bitcoin. It's to store purchasing power. It's to hedge inflation. It's to be sound money. So anyway, I wanted to share that with you. When we come across information that can benefit the community through some of the relationships we have and the information we stay plugged into all the time, we try to put that out to you so that you can make decisions and see where you're at, what you want to do, call your attention to it. So go check it out if you want to listen to that episode. It's on the Rebel Capitalist Show on all your favorite podcast platforms. And in the meantime, remember, we're doing our meetup on March 9th, 2022. It'll be on Zoom Interactive. We'll talk about a few things and we'll have some discussion. Make sure you RSVP by sending an email to meetup@code3assets.com. Again, that's meetup@code3assets.com. Absolutely no charge or anything to that. Happy to have the community start collaborating together, and as we continue to do that and grow the participation in those interactive meetups, and we'll start bringing in some of these guests from our network, and it'll be an awesome opportunity for you guys to be able to listen to them and perhaps ask some questions and so forth at no expense to you. So leverage the expense and time we've put in developing all these relationships and the infrastructure and so forth. Put all this together. Happy to have you show up, and with that, we'll see you next.